Good morning, everyone. I would like to welcome you all on the second day of the Future Bank Summit Saudi Arabia 2020. We had an amazing day yesterday with fantastic knowledge sharing sessions and networking opportunities with some of the leading technology vendors exhibiting at our summit. I would also like to thank all of our amazing speakers who took time out of their busy schedule yesterday and today. This conference would not have been possible without the support of our sponsors and partners, IGTB, our platinum sponsor, CoMarch, titanium sponsor, FSS, payments technology partner, AppsFlyer, silver sponsor, Alteryx, strategic analytics partner, Swift, financial messaging partner, all of our strategic media partners, and of course, our wonderful audience. Thank you all indeed. We have a power-packed agenda today with a star-studded lineup of speakers and panelists. I would also like to remind you that we are rewarding the top 3 delegates featured on the leaderboard. Well, as of now, Mr. Imran Sharif from Al Babtain Investment Company is leading the contest. And I would like to encourage all of our delegates to visit sponsor booths, chat with sponsor reps, attend sessions, and gather points to win exciting prizes. I now once again welcome the chairperson of the conference, Mr. Amit Jugnauth, who was absolutely phenomenal yesterday in running the conference successfully and leading all our speakers through the agenda of the day. I now pass on the floor in his safe hands. Amit, over to you.
Thank you, Rohan. Good morning, everyone. Salam alaikum, sabah al khair. I hope you had a pleasant evening, and I also hope you had a thoroughly enjoyable day yesterday. I really enjoyed it. Fantastic speakers, as Rohan has said. Really insightful. We had lots of different perspectives. I think day 2 is going to be really exciting as well. Now, as Rohan has said, I'm actually joining you from the UK, London, UK, where I'm the head of IT risk and governance at Lloyds Banking Group. But you may be questioning my appearance. My fashion sense today is a little different to yesterday. For those who did join yesterday, you'd have heard I shared my personal connection with Saudi Arabia, in that my wife is Saudi. My daughter was born in Saudi Arabia, so we have a very personal vested interest in the kingdom. All my in-laws are there, my wife's family are there. And in one of the breaks, I popped out. I'm working from home due to COVID, and London, we're in lockdown still. And she said, I thought you were presenting to Saudis. I said, well, yeah, I think most of the audience are from Saudi. She goes, you should have worn your tob. You know, you want to relate to locals, be a local. So I thought that's a good idea. So day 2, I decided to wear my tob. I only get the chance to really wear it in Saudi, so I feel like I'm virtually in Saudi Arabia. So this is me trying to connect with you, albeit online. The only thing we're missing here, unfortunately, is sun. It's not. We haven't hit sunrise yet, and I'd normally be tucking into Fall Masul if I was in Saudi, but I've had to settle for cornflakes this morning. But moving on, look, we've got a really action-packed agenda today. As Rohan has said, the greatest opportunities in sessions like these is to connect with your peers. Network. Lots and lots of great opportunities to speak to people. You can speak to the presenters, you can speak to people who are not presenting, get different perspectives about similar challenges that you're facing in your organizations. That insight, the best insight you can ever get is the insight from someone else who's had the experience of dealing with the challenge that you've had to deal with. So I really encourage you, log onto the portal, connect. Don't just connect today, connect after today, but especially today, because if you connect, you get points, you win prizes, and that definitely doesn't go on past today. So please do that. Connect with our partners, connect with our sponsors, connect with your peers. Just very quickly, I also want to thank our partners who are making this event possible today. So I'll just run through. We've got IGTB, Intellect IGTB, who's our platinum sponsor, our titanium sponsor, CoMarch, strategic analytics partner, Alteryx, silver sponsor, AppsFlyer, and financial messaging partner, Swift. This wouldn't be possible without them. So if you're getting value from this, if you're making those connections, if you're learning about things that you weren't familiar with, even if in the future there's a challenge that comes up and you recall future bank summits, KSA, and that helps you with a solution, these partners are really making it possible. So thank you from me. You've given me a chance to connect with the part of the world that I actually really enjoy connecting with. So if we touch on some of the things we're going to look at today, so clearly a big theme of what we're going through is impact of COVID. What does the future of banking look like post today? How does technology play a part in facilitating that change? So some of the things we'll look at is how does it impact your customer experience playbook? The shifting nexus of retail banking during COVID. And actually, it's interesting. We talk about retail banking. One of our speakers yesterday referred to the commercial sector, which actually I think the importance and their dependence on the banking sector, not just in Saudi Arabia or the UK, but globally, has really come through during the pandemic. So a very, very important role that we play as banks in helping the economy thrive and grow and recover. Transforming banking customer experience fully remotely. So I know from my family in Saudi, a lot of them had to work from home and work remotely. I'm working remotely. I've been working remotely from home since March. So Lloyd's sent us to work from home before the official government lockdown. My wife is also working from home. Lots of challenges that comes with, particularly in the IT space, where if you have labs, if you have sort of engineers that like to work in groups, the lack of the personal connection can hinder. Similar though, some people prefer the sort of focused isolation working manner. So what that really kind of lends itself to is ultimately the question is, how do we operate moving forward after today? The world will be a different place. What does it mean for our IT functions and our banks? In the second half of the day, we'll be looking at corporate banking. So I've sort of touched on that already. Driving innovation in response to COVID-19. We've got some very interesting presenters there. And then at the end of the day, there'll be an opportunity. We had lots of questions yesterday, and unfortunately, we couldn't get to answer all of them. We'll have a similar session today, and we'll see how we can time this to make sure we get all the questions through. But please do use the Q&A facility to ask questions. Feel free to ask them during the sessions. There's a feed coming through to the speakers. They'll see the questions come up live. They can integrate those into the presentation and answer them. They'll answer them live. If you have a question towards the end and you still want to get that answered, please then join. Make sure you're here at the end of the session today, where all the speakers will be coming back together to be able to answer the list of questions that have been asked. So on that note, I'll just have a look. I think we might be having some technical challenges in our first presentation. So what I'd suggest you do, so we've talked a lot about networking. So what I'd ask you, we'll take 5 minutes, take a 5-minute break. Just please go and familiarize yourself with the various sections of the portal. So there's a section for our speakers, for our sponsors and our partners. Please go look at that. Like I said, they've made this possible. We wouldn't be connecting here yesterday or today if it wasn't for them. So I think we need to really, really thank them. Please go and check them out on that part of the portal, and also go and network, go and connect. Look, virtual connections, online connections are fantastic. Human connections are even better. And we live in a world where we can bring those two together. So I made many connections yesterday, people I would have never had the chance to meet, despite the fact that I have a connection with Saudi Arabia. Lots of people I would never have had the chance to meet. So this has made it possible. Please go explore, make sure you're familiar with it. We'll take 5 minutes. So if we could come back at 10:15, 7:15 UK time, 10:15 Saudi time, and we'll kick off the first session then. Thank you very much. Speak to you in 5 minutes. welcome back. Assalamu alaikum. So I hope you had a good chance to browse the portal, do some networking, familiarize yourself. Like I said, one of the best things you can get from events like these is the opportunity to network with peers, partners, and sponsors. Please maximize that. And our organizers are very generous. It certainly doesn't happen at events in the UK, but those who interact more get points. If you have lots of points and you finish top of the leaderboard, you get a prize. So definitely worth the networking. So look, we've hit a few technical difficulties. So we've had a last minute change to the agenda. I guess there's an element of irony in an IT conference, and we have some IT issues. But we live and breathe that every day. So and we're good at dealing with it. So in normal times of response, we've shifted the agenda. So I'd like to welcome Fahad Al-Wajri. Fahad, apologies if I've mispronounced your name, but Fahad is the head of retail banking technology and enterprise solutions at Saab. He'll be moderating this panel that we've brought forward, and this panel is the shifting nexus of retail banking during COVID-19. So Fahad has a BSc and master's degree in technology with over 16 years experience, which includes taking multiple roles in technology, supply chain, and banking industries. Fahad, thank you to you and your fellow panelists for the last minute shift and making this possible, and I'll hand over to you. Thank you very much.
Thank you, Amit. It's always the case, right? When you have a presentations or meetings. Yes, I would like to welcome everyone here. Today, we're going to talk about the shifting nexus of retail banking during the crisis. It is my honor to welcome my guests today. We have Russell Burden, the Director of Partner Development and Apps Flyer. Hi, Russell.
Hey, good morning.
I'd like to welcome as well Amit Malhotra, the General Manager of Retail and SME Banking in Commercial Bank of Dubai. Hi, Amit.
Hi, good morning, everyone. Pleasure to be here on this forum this morning.
Pleasure is ours both. So, speaking about the COVID and its impact, I would like to start with Amit. How banks can keep track on cost while rebuilding the revenue infrastructure?
Thank you, Fahad. I think that's a very interesting question. And frankly speaking, I think COVID or no COVID, I think that's a question which all of us face as bankers. I think your always challenge is that how do you keep investing to grow your revenue? And at the same time, how do you also balance or manage your costs more efficiently and get the right optimum mix? And when you talk about cost, there are good costs and bad costs, right? And when I say good costs, typically are attributed to costs which are more like investing to generate more revenues. On the other hand, bad costs are costs that you're incurring because of inefficiency, right? So for example, as organizations, a lot of time we find we have a maker, checker, and a checker on a maker as an example. Right? So I think the start point is for us for obviously to identify that how do we incur good costs and how do we keep eliminating bad costs? That is one. I think the other thing, of course, while we do that, we have to keep in mind that as we invest to grow our revenues, our costs can't be linear. Hence, a large part of your investments costs are targeted towards how do you make yourself more efficient to generate your revenues. And then, of course, as we speak today, what we're seeing is that there are much more smarter ways of growing your revenue. So, for example, you don't necessarily have to stack up linear capacity to grow your volumes or grow your business to generate high revenues. What we're seeing is more and more we're trending towards onboarding customers digitally. So if we were to talk as an example, in the last 2 months, we have onboarded almost 95% of new banking customers fully digitally without even one piece of paper or one human interaction of any form required, as an example. Similarly, for the customers that we already bank today, the opportunity around how we cross-sell, upsell, not by throwing in more capacities, not by doing multiple calls to them, but enabling the journeys in a way that the customer can actually do self-service based on his need, and you customize the products accordingly, as an example, right? And then the other way, what we're finding also is the way to grow your revenue without not necessarily growing your cost is how do we also play the partnership much better? So today, for example, there are fintechs which are in the play. So our ability as a bank to partner with the right fintechs instead of doing our own investments, instead of incurring our own costs, how do we leverage on fintech capabilities and get the speed and cost to market, as an example? or we play with larger ecosystems where we partner with telcos, for example, who in return have an ecosystem of customers and come in as banking as a partner, provide banking as a service, and hence drive revenues without necessarily incurring the costs. So I think a large part of it, the way at least my personal perspective is that while we want to grow revenue, we have to just make sure that it is not coming with the linear increase in cost, and hence we make sure that how we leveraging available technologies, how we leveraging partnerships or collaborations with fintechs, or how we playing with people's ecosystem. I think to me, that's the start point, the way we look at it.
So, Amit, I mean, what makes the crisis a bit special, it came all of a sudden. I mean, if you can tell us about last year, I mean, all of a sudden when the crisis happened, what was the biggest challenge? Is it the curfew? Is it the lockdown? Is it the the uncertainty in the market? What would be the biggest challenge you faced last year from balance sheet perspective as well?
Frankly speaking, it's a combination of everything that which you mentioned. I wish I could say there was one big thing. It was a combination of everything. But just to backstep a bit, I think for us, and I think most of the banks around us, we all started our transformation journeys or our digital agendas a couple of years ago, right? So it's not that because COVID happened that we all started thinking digitization or started thinking automation or started thinking what the new world would be. For example, we as a bank, we defined what we call the bank of tomorrow 2 years ago, where we started defining what the bank of tomorrow would look like, and what look like for the customer, for us, and how would then the various elements around us play into it, as an example. But what COVID did for us is that in many ways, it forced us to fast track what we were doing. What it did was that it's not just only put the bank's perspective, but I think now what we're doing is driven more by the customers. So it created a situation where the adoption from the customers became much higher and rapid, which accelerated the need for banks to kind of do what we were planning to do anyway, to solve for the problems. So first thing, I think what this pandemic has done for us is find ways and means to adapt to the new world, which was going on, but we accelerated. I think what it has done in many ways is that also kind of driven the customer behavior to higher adoption. I think in many ways, it also has exposed the other risks that we haven't thought of. So for example, you want to service the customer, but there are chances that one day you might not be able to go into office stock. Hence, how do you then build your capability in such a way that you're leveraging on technologies to be able to service customer real time 24/7, not confined to a brick and mortar structure, as an example. I think also what has driven us to do is that, when the market when there's no physical interaction, how do you onboard, how do you service customers digitally end to end? And I think the other element which has also exposed is that how do you then manage and mitigate risk which come with something of this sort? I mean, to give you an example, when you today call a bank for a 24/7 call center service, the banks run 24/7 brick and mortar call center service. Now, in COVID situation, you were working from home and servicing a customer, but that also meant that what does it mean from a data security point of view? To make sure that the access to customer information, the access to customer data is also at the same time safeguarded, knowing fully well that you're no longer operating in your brick and mortar structure. Right? So I think for me, it's been a combination of these things, which have posed the challenges for us.
Well said, Amit. So Russell, I mean, as you are the I believe the director of development at Apps Flyer. I mean, a global leader in mobile app attribution and measurement. So tell us, I mean, it says he was ready to fight the crisis from technology perspective. Tell us what is the new, I would say, strategy that banking system in general have to follow to maintain the revenue and customer expectations as well.
I think Amit touched on a couple of points there. I think the big one is the customer expectation. When you look at it, Saudi Arabia as a region, it's got one of the highest mobile penetration rates globally. Everybody is on their mobile device. So therefore, consumers expect a bank to be on their mobile device. If they're not on their mobile device, then they're probably not going to choose to go with that bank. You also have that shift as well, where historically parents might have gone to a brick and mortar bank, but the newer generation, the younger generation, they're so used to doing everything on their mobile phone. They want that simplicity. They want that ease. They want to be able to take out a loan via their mobile phone. They want to make payments via their mobile phone. They want to be able to do everything through their mobile phone. And as I mentioned, a lot of financial services have been going on that journey, but it has been a slow journey. And I think the COVID situation has definitely accelerated it 100%. We're seeing it not only in this region, but also across the whole entire world.
So mobile is just, I mean, I would say it looks a simple interface, but behind it, there are a number of technologies when it comes to security and when it comes to data management and all of that. With the uncertainty that COVID have created, in the market, how do you see the growth of AI adoption from data modeling, from advanced analytics as well?
Yeah, I can see it happening quite a lot. As you mentioned with mobile, obviously, if the whoever the advertiser is or whoever the bank is, as long as they're working with partners that have that robust security, definitely for anybody out there listening, if you're thinking of implementing technology into your app, the first thing I would do is check out the security and privacies of any company. But once you've obviously got that security, you start to understand what the users are doing. The beauty of mobile, and something that Appify definitely does, is give the advertiser the ability to understand what the users are doing within the app. So having that understanding, you can have a better understanding of what they enjoy, what they don't enjoy, how they like to be engaged. Do they prefer a push notification over an email? Do they prefer a Facebook ad over an outside advertising ad? Whatever it may be. By having that data and by having that understanding, you can really then start to customize your products. And again, that was something that Amit mentioned earlier. It's being able to customize your products to what is relevant for your user when they are ready to receive it. Not necessarily just pushing something or just blanket advertising something saying, hey, we've got a new loan rate available. It's like, okay, I know that this person is moving house, they're having their first child, or whatever it may be, because of the information that you have, their purchasing behaviors, etc. So therefore, it gives you a better understanding of how to serve the customers better.
I do agree. Certainly, the crisis is unfortunate. Our prayers to the families, but it created everything that digital wants. The uncertainty, the remote working, all of that. In few months, everyone is just adapting because they have no option to. Gentlemen, I would like to thank you, really. It was really fruitful talk, and turning the mic to Amit and the moderators. Thank you very much.
Thank you, Fahad. Thank you, everyone.
Yeah.
Thank you all. Very, very interesting conversation. There's it's amazing actually the similarities between what you're seeing in the region there and what we've seen in the UK actually, because definitely there's been a flood of online movement. We talked about fintechs yesterday. Something we've seen is as the sort of dependency on some of the more incumbent banks has increased, there's been a big movement back towards the incumbent banks, but with the expectation of being able to do banking on mobile phones and technologies and so on. So that's a very interesting comparison. Right, so I just wonder if we've got any questions. So before our panelists jump off, I think we might just see if we've got any questions coming through. So actually, if Fahad and Amit and Russell, you could just sort of stay on for a little bit longer. I think we have some questions coming through shortly. I guess I'll throw a question at you if that's okay. And it's just interesting, Russell, listening to some of the stuff you're talking about in terms of the customer preferences and a move to what I heard you say is there's a big move towards customer centricity. I also noticed that's a British accent you have there. And I guess I'm going to flip this around a bit. What do you see are the biggest differences between what you're seeing in terms of customer activity in the Middle East and maybe what you've seen in the past in terms of customer activity in a place like the UK or Europe? Are you seeing big differences in the regions? I mentioned yesterday that actually I've always been surprised and amazed at actually how technology savvy the general Saudi population is. If I compare my mother-in-law to my father's the kind of guy who types with one finger, right? So my mother-in-law will say she doesn't understand technology, but she does everything on her phone. everything on her phone, and she does her banking, her shopping, she travels between cities, she buys her tickets online. There definitely seems to be an increased awareness across a broader population set in Saudi compared to what I've seen in Europe and the UK. So I just wondered if I maybe throw that to Russell initially, but certainly interested to hear what Fahad and Amit have to say on it as well. Do you see a big difference between the sort of levels of awareness and use of technology for this kind of thing?
Yeah, definitely. Like I said at the beginning, that the penetration rates when it comes to mobile devices in the Saudi region is through the roof. It's probably one of the highest in the whole entire globe. When you have that penetration and you have more people using it, a lot more mobile first companies come about. So therefore you are used to using your mobile phone to do everything. If you compare that to somewhere like the UK, we had 15 years of desktop computing. And it was only probably until the iPhone in 2007, 2009 really came along that all of a sudden people started to slowly make that transition. Whereas I think in somewhere like Saudi, you do have that higher adoption because people are more likely just to access their phone. Do everything on their phone, make the transactions, make the banking. And I think a lot of the companies as well realize that. So therefore, the companies are going mobile first instead of saying, oh, we're going to create a website first and we're going to make sure our brick and mortar is done first. It's like, no, we realize our customers are on mobile devices. So therefore, we're going to make our product mobile first. We're going to make that experience amazing for them because then they're not going to go anywhere else.
Very interesting. Fahad, any input from you?
If I may comment, last year we used to report in the banking in general here in Saudi, a ratio between cash transactions and cashless transactions, card-based transactions. All of a sudden now we don't report cash even. We report contactless and contact, and the card is the new norm. I mean, we are talking about now 80% of our transactions are contactless. It's the numbers issued by MEDA, our local scheme here in Saudi, and it shows, it's totally different league. In 1 year we are shifting totally. So the adoption is really picking up, given the average age of the population and all of that.
And is that driven through the pandemic, do you think? Because we've had contactless here for a while. But there's a limit. The limit here used to be £30, so roughly 150 riyals. I was quite surprised when I came to Saudi recently. I was able to pay like up to sort of 500 riyals contactless, which I wouldn't be able to do here actually. I'd have to go and tap my pin in. Have you seen a real drive because of COVID, or do you think that was happening already?
So, no, Fahad, I guess you give Saudi perspective, and then probably I'll just add my 2 cents on what we're seeing in some of the other markets.
So let me walk you. During the pandemic, during the lockdown, the central bank stepped up and issued more than 8 or 9 new rules or mandates for banks to follow. One of them is the expansion of contactless limit, and others for lending and all of that. And we all banks have to do and implement and test. Technically I'm coming from the IT department, totally remotely during the lockdown, and we delivered these 9 or 10 new rules. And one of them is the limit of the contactless. So driven by the central bank push, driven by the nature of the crisis, of course, the nature of the customers, all of that in combination have driven the high adoption of digital payments in general.
And if I were to just add to that, so I think what we're seeing is across different parts of the world. One is, and to your point, is anyway there was a journey being covered by almost everyone in this play in terms of driving more and more digital payments or digital banking or digital financial solutions, as an example. So I think in many ways what this pandemic has done is just accelerated it. And it's accelerated both ways. So one, of course, the readiness and the ability to execute on the part of banks. And I think the other thing what it's done is it's driven the behavior for the customers. So for example, when you talk about tokenization, Apple Pays and Samsung Pays of the world, they're not something which came in pandemic. These are something which been there for 2 years, 3 years now. And there was always earlier a push from the bank side to drive adoption. what we've seen after pandemic is that it's the customer who's not driving the adoption because of various reasons, and hence, the use of tokenization, contactless, cardless payment is gone up. That's happening in one thing. The other way also, if you look at it, is in some of the other parts of the world, just to give some perspective, since fortunately I've been exposed. In many other markets, what we had seen even earlier, the whole growth of unbanked or underbanked was actually happening more at the back of digital solutions or digital banking or digital payments, and not necessarily the brick and mortar way. So, for example, if you look at some of the African countries, we've seen that there the whole lot of movement of unbanked getting into financial inclusion, or if you look at some of the frontier markets in the ASEAN region, markets like Myanmar, Cambodia, Vietnam, what we've seen is even pre-pandemic, the growth in the whole payments space or in the financial services was happening at the bank of financial inclusions of underbanked or unbanked, which was driven by the mobile or the digital platforms. So I think for these markets, pandemic again has accelerated, but the drive was anyway happening. And I think on the other markets, we saw that earlier the push was coming more from the banks want to do it. I think what COVID has done is kind of made sure that what the banks were doing, they accelerate, and then what the customers do it. And I think the other dimension is this also has made the regulators and the other players in the market also to think that what is this new world going to look like. So, for example, the way the earlier risk was seen on a tokenized payment versus now the limits allowed on a tokenized payment as an example, or for that matter, various fintechs coming into play and enabling some of these solutions to fast track the execution. I think that is how we've seen evolving the last 6-8 months.
Okay, very, very interesting perspectives there, actually. Very interesting perspectives. Now gentlemen, there are a flood of questions for this panel this morning. So if we can keep the conversation going, that'd be great. I just need to like literally as you've been talking, they've been popping up here. So so the first question we've got, which is it's maybe it's related to the conversation we're having here. So how far cloud computing is safe and secure with respect to banks, as we are dealing with customers' data focused on data privacy? So it's just a bit more possibly of a sort of security regulatory question, but it'd be good to understand your views on that. So maybe if Fahad, we could maybe start with you on that one. Your views on, as a technologist, your views on cloud computing and its security and safety.
I mean, in general, during the past year, there is an increase in the cyber threat. Probably people are locked down at home, enjoying their hobby of attacking other organizations. Also, we heard about 2 days ago, I mean, during the G20 summit here in Saudi, they were talking about millions of attempts of cyber threat. It will continue growing as we advance in technology and customer experience and different. These tools are getting advanced more and more and getting smarter than ever. And it's part of the deal. I mean, you move people, or if you're offering some propositions digitally, you will always have that risk. It is an important, topic have to be on your top priority when you deliver any solutions digitally, of course.
Sure. Amit, any views from you on that?
No, I completely agree with Fahad. I think these have been topics of discussions for a long time, right? I think now the thing is that they've become a reality. The reality is that more and more, as we talk about digital payments, as we talk about cloud-based solutions coming, either on the computing side or on the payment side, or even services hosted on cloud, right? The reality would be that is something which is inevitable, that will grow, because that's the only way you can be fast, efficient. And having said that, obviously the threats and risks will continue to grow. So it all boils down to that you as an institution, you as a banking system, you as a regulator, you as an overall ecosystem, how do you just make sure that as you drive towards these platforms or the cloud-based solution, you also make sure that you have your security is completely done. I still feel that we are still at a very nascent stage. I still feel that, we are still not fully geared up, and partly also because some of the pace of adoption has been so high that, I think in many ways we're not ready pre-pandemic. And I think that would be the theme going forward, at least for the next year, 2 years, or 3 years to come, my personal view.
Sure. Okay. Russell, any thoughts from you?
Just more from a partnership perspective, especially when looking in the mobile space, it is obviously, as a bank, you won't be able to do everything yourself. You will need to work with other people, whether it's a CDP partner, product analytics partner, attribution provider, for example. So it is just making sure that due diligence is done and those technologies do have the right securities and privacies in place, and they're not going to be the back door to your keys or to your kingdom as such. So yeah, definitely making sure that the partners that you are working with, they are completely robust as you would want your own stuff to be.
There's interesting points actually. So, and it kind of relates to, it's actually a good segue into this next question. So there's a question on neobanks focused on retail banking and whether there's actually a return on investment with regards to the neobank market. And I guess one of the differences we see here is the adoption of things like cloud by the neobanks is clearly, yes, it's in a different, completely different space. That, you know, when I speak to peers in the neobank sector here, they're definitely not talking about legacy challenges. They definitely don't talk about mainframes. They're talking very different language. I guess what's the panel's view on, I guess, the neobank sector and whether there is a return on investment in that sector eventually. So Amit, maybe we'll start with you on that one.
Sure. This is a subject which is very close to my heart, right? So thank you for giving me the opportunity to tee it up. I think if we were to just start looking at the data points around us, and if we were to just look at UK as a market, what you were talking about earlier, or for that matter, some of the European markets where we've seen that the neobanks, really have come up in the last few years, right? And without naming, we know which are the obvious 4 or 5 big banks which are today out of Europe or UK for that matter. If you look at the bottom line, none of them so far are making money. If at all, if you look at their financials for last year, I think we are talking about the losses only going up. These banks in the range of 50 to 60 million pounds, or dollars of losses year on year. So in many ways, so far the story has been that the denominator is growing, right? You're growing your base, but it's not translating into numerator, which is basically return on what you're doing. And there are multiple reasons for that. But to keep it short, I think the advantage what the neobanks bring today is that they don't have legacy systems. They don't have, the hierarchies which typical traditional banks have. They have their ability to adapt to customer journeys, to build UX interfaces based on customers is far more superior as compared to what traditional banks would do. I'm not saying are doing. Hence, because with the ability to go in the market and move faster, gets them, customers getting attracted to them for a start. But I think the problem starts for them is that what is your real underlying economic model? Offering free banking, offering monoline products, has it got to no limitation? On the other hand, if you look at the brick and mortar bank, the reality is that customers still have trust. They still want trust. They want a trusted bank for their money. Brick and mortar banks have history. That's what goes in their favor. They also have suite of products. For example, when I bank someone as a retail banker, I also bank him for his wealth. I bank him for his payment products. I bank his family. I give him an insurance cover. I take care of his mortgages. And I also bank his business. I also bank his employees. So there's a wider play, because of which, traditional banks can have more revenue lines as compared to some of the neobanks. I mean, not all, right? And then because of that underline also, the traditional banks have far more excess of cheaper cost of funds, which is critical, right? Ultimately, money is our pipeline, what runs our business. So what I'm trying to say is that there are inherent advantages which the neobanks have, which is making them click right now. But I think what we haven't solved for it is the long-term sustained profitability. On the other hand, brick and mortar banks are moving very fast on the digital transformation. So if we can have the right combination where brick and mortar banks start think like neobanks, and how do you do that? You partner with fintechs, to the previous point, to accelerate your growth. You make sure that your UX in UI UX journeys are keeping in mind the newer customers that we have, and at the same time play to your strengths. Ultimately, for me, it's almost like we are gunning for the same customer, which is a moving target, unfortunately. So the question is, who covers the journey faster? And hence, in short, I don't think we have a ready answer. In many ways, I feel the future is almost somewhere in between, where we are talking about phygital banking. There is some need of some kind of physical presence, but yes, it's going to be digital first. And the question is that who can move it faster, the neobanks or the existing banks? But these are purely my personal views.
No, that's very, very interesting. Very interesting views, actually. Very interesting. Russell, could I move that question onto yourself? I guess we'll have a slightly different perspective from you as well. What are your views on that?
Interesting, you say that, but I think Amit covered a lot of points there. And the biggest one was with the neobanks is that ability to change at speed, change at speed to the customer needs, and be able to produce products that they want and they need within a couple of days versus it taking 4 or 5 months or however long it may be. So I think that's probably the biggest change for them. But yeah, I completely agree. I was actually going to say, Amit, are you going to target that the word that you used there, the physical? I think that's going to definitely be the future. Is that the future of having that physical presence, but doing everything online, and only being able to actually go into your bank when you need something big, whether it's, I don't know, a mortgage or a loan or something like that. But every time else, you do everything on your digital bank. And I think it's that hybrid. I think that the neobanks are definitely helping the adoption for brick and mortar banks. One of the things that we tend to see when we deal with financial services clients is if they don't have a bank, a lot of the time the consumers don't choose, oh, sorry, if they don't have an app, a lot of the time the consumers don't want to work with them. They don't want to open an account with them. So that is something that people now will look at and say, how good is their app? What's their app store rating? Is it got usability? Do they change? Do they have everything I need? So I think because of that, it's definitely made a big shift.
Thank you. Fahad, if we can move that question to you. So we might have a similar perspective on this, given the history of the organisations we work for. But what's your take on neobank emergence?
Coming from a brick and mortar bank, I would say what we have noticed. I mean, working or I won't say competing yet. I mean, those the fintechs and the new banks, they look into customer experience differently. They compare themselves with, I don't know, Airbnb or Facebook or stuff like that. All the time, we always compare ourselves with other banks. That, I mean, it is, I would say a key change to the competition, how to gain a better customer experience. Moving forward, I would expect, I mean, they will start doing money once they realize how the market react to them. I would expect more alliances and joint ventures between them. I mean, fintechs, and we have seen last week a big acquisition of Western Union to our local STC Pay here in Saudi. I mean, they took 15% worth, I think, $200 million. So I believe more alliances will make our life harder. We as legacy normal banks, and that's a big, I would say, trigger for our local digital transformation to truly transform and not just introduce services online. But no, a transformation is wide bigger.
So it's interesting. So Lloyd's is a brick and mortar bank. I mean, it has been for probably 300 years, to be honest. It's been around for a very long time in the UK. I was at an event at Cybos last year, and it was a panel similar to this, and there was 2 neobanks and 2 what would be called incumbent banks in the UK. And I think the sponsor of the panel almost wanted some challenge between the neobank sector and the incumbents. We probably spent 45 minutes agreeing with each other, which was quite interesting, because I think the challenge in technology, technology is one of those fields where you can really learn from others. You really can learn from others. And I mentioned this yesterday, we're competitors in industry, but actually we're very much partners in terms of the challenges that we face. The big focus, I think the thing that I'm quite excited about in the banking sector is the shift from product offering to customer centricity. And everyone, I haven't met anyone who disagrees with that. Certainly across the peer banks in the UK, the neobanks, it's about what does the customer want? How do I serve the customer's need? How can I tailor my offering to suit what the customer's requirements are? Which is, and it's different challenges in terms of some of the things we've talked about in terms of commercials for the neobank, but in terms of that product shift for the incumbent banks, that's a very interesting journey. So it's good to sort of hear this, that whilst coming from very different perspectives, actually, there's an expression, all roads lead to Rome. I don't think that's necessarily true anymore, but certainly all roads lead to technology in some shape or form. Now, Fahad, there's a question that's coming directly for you on this. So if I'll ask you first, and then Amit and Russell, see if you've got any views on this. So how is IT responding to, I think this is a long question, or it might be 2 questions in one. So let me go through this. How is IT responding to further need to further the need for business to get more insights. Things like segmentation and analysis. What's your opinion of adopting self-service analytics? I'm not sure if that's two questions or one question, but it's got your name right in front of it. So, so Fahad.
So I'll highlight some points from the topic in general, guide me if that answered the question or not. Yes, in the past, I would say 2 to 3 years, I mean, a major shift in handling data is all around IT. We started, I mean, new roles have been introduced. First time we have data engineer, data scientist, data modeling analyst. So the use of data is really, I would say, in the very mature phase when it comes to technology delivery. With the pandemic, I mean, I would like to link it with the pandemic. I mean, the main, I mean, factor during the pandemic, as my business leads here in the bank, is uncertainty. We need more data and more smart analytics in order to respond. So it's not, we shouldn't be looking at, especially from a bank perspective, when it comes to credit risk evaluation and offering lendings and all these products, you shouldn't be offering the normal way rules, I would say. You will have to you will have to look into data insights, connecting more dots to get you useful decisions. Add to that also the use of data for facing cyber attacks. I mean, it is all about, yes, we have the technology now to analyze the behavior of any traffic we have in order to respond. I'm not sure if that answered the question or not, but I would say, I mean, when we look into technology from growth to mature to stability, it is in the high point of maturity where you can see it on the ground with being materialized as roles, as people, as teams, as actual delivery.
I think that does answer the question. Now, gentlemen, we're coming up to time, so there's one question that's just come in, which is actually a really great question. I think it's a really fantastic one to close on, and it's I'd like to hear from each of you on this. So, what is one prediction for retail banking, for the retail banking world during and beyond COVID? So, Russell, if we could maybe start with you. One prediction for the retail banking world during and beyond COVID.
God, it's a tough one. You can come back to me.
Okay, sure. Amit, could we move that question to yourself? We'll give Russell some time.
Sure. I think if I were to just answer this in one word, for me, the future, at least the near future, will be all about convergence. And when I talk about convergence, it's a convergence of brick and mortar play, digital banking play, mobile banking play, fintech play, regulatory play, super apps play. I think what we're going to see more and more going forward is what is the convergence. Reality is that banking as a service would prevail. The question is, in what shape would it be consumed by the consumers? Would it be consumed in the form of phygital banking, which is banks plus branches? Would it be consumed in the form of being part of super apps, like what we've seen in China, like the WeChat example, class example, or would it be part of your a collaborative fintech play? But for me, I think convergence is something that we have to sit and watch for. And as smarter banks, we should be in front and driving that.
Fantastic. Fahad, we'll give Russell a bit more time. Fahad, your prediction for the retail banking world during and post-COVID?
I would expect, and it's a matter of few years, we'll see cases where fintechs acquiring brick and mortar banks. I mean, I would say it's a matter of a few years.
Wow, that's a great prediction. Great prediction. Thank you, Fahad. So Russell, there's an air of expectancy now. So
hopefully it delivered. I think we spoke about it a lot on this panel. It's customer experience. I think this pandemic, in the future of the pandemic, has really made everybody kind of sit up and say, okay, I've got my customer base. What is important for my customers? How can I keep my customers? How can I keep my customers giving more to me? And how can I give more to my customers? So yeah, I would say it's customer experience.
Excellent. Gentlemen, thank you very much. I think that's been a fascinating conversation. In in many ways, and I hear people at Lloyd's Banking Group say this, what's been great about this conversation is how much we talked about customer, and actually how much we talked about the shifting dynamic and how banks are having to keep up with customers. And as technologists as well, it's quite easy to get stuck in the technology conversation and forget there's actually someone using the technology at the end of a phone or a desktop, or even walking into a branch. So I think that's been really, really great to kind of just remind everyone, actually, we are here to serve customers, and we probably wouldn't exist if we didn't have customers, right? Be it if you're a technology firm or a bank, we're all serving an end customer in some shape or form. So thank you for staying on. Thank you for your participation. Some really, really fantastic insights. I hope you have a good day. Please stay on for the conference. There's lots of interesting conversations. Please go and network as well yourselves, and for our audience, you've heard some really interesting stuff here. So please feel to reach out to Amit, Russell, and Fahad through the portal. But that's been a fascinating conversation. Thank you very much.
Thank you, Amit. Thank you, everyone.
Thank you, everyone. Thank you for being here this morning. Take care.
Excellent. So look, excellent way to kick off the day. We're now going to move into our next piece, and I'm going to introduce Krishan. And Krishan, I apologize. I really apologize for mispronouncing your name. Krishan Srinivasan, and Krishan is the Global Chief Revenue Officer, FSS Technologies FZE. And Krishan, if I could hand over to you, you have the floor. Welcome.
Sure. Thank you. Good morning, Amit. Just quickly, let me get my presentation up and running. Just 1 second. Very good morning to all of you. In fact, I've been listening to the sessions yesterday and today. Very interesting coverage, Amit, and great moderation. One can't take away the fact that the world is undergoing a churn set in motion by a crisis that could actually bend the arc of history. I never said this, somebody else said this, but I thought it was a very appropriate quote for what I'm going to be speaking on today, which is about the fundamental construct is technology changes in payments, particularly in retail payments, changes society at a very fundamental level, right? So the narrative today for me is going to be on the inevitability of the payments that are undergoing massive changes today. So I'm going to be very crisp. I'm actually going to talk about how, in the context of Saudi, cash loyal society to cashless, challenges, opportunities, and readiness from a retail payments ecosystem perspective, because there are quite a few players that would make this entire ecosystem complete. I want to touch upon 5 strategic retail payment themes. And then, of course, one slide on monetizing and why we believe that FSS is uniquely positioned. So first and foremost is the less cash vision of KSA, and of course the demographics and enablers. As you can see, this is a no-brainer. This is a condensed version of all the information that is there in their vision document. Essentially, we're talking about a very ambitious target, where in the next 10 years, they're talking about 70% of transactions to become cashless, right? So demographics, great demographics. You've got 71% of the adults are under, 71% of the population are under 30 years of age. So that makes it a great segment. Digital channel penetration, digital literacy. There are targets with reference to how the point of sales would want to move from 0.4 million to 0.6 million in the next 3 to 4 years. And then, of course, like the telecom sector, there is also this benchmark of ARPU for your e-commerce transaction that is also likely to go significantly from 16% of 45% of what is happening with respect to online purchases. What is also happening is that there is a very strong conducive infrastructure in terms of payment infrastructure, internet, mobile connectivity, etc. in Saudi. There's a lot of innovation happening. There is this digital literacy. This is a very high percentage of literacy in the space of digital, and mind-boggling government programs, particularly during these COVID times. All these are levers that will actually enable them to move towards meeting their payment vision for 2030. Now, I would call it as the power of 4S. So when it comes to digital payments in the context of retail, it's very important that what is going to be driving change are these 4 S's. Smart cities. smart customers, smart homes, and smart stores. So when we talk of smart customers, we're talking about young and wealthy. We talked about the demographic profile. There is a high digital literacy. They are sophisticated, and more importantly, it's all about instant gratification. And the most important of all is convenience. Smart homes, talking of smart homes, it is IoT, then objects and devices that can engage in not just talk, but also try and spend, right? So IoT payments is going to become big time. That's going to be one of those big changes that we would see in the country. Smart stores, scan and pay, multi-lane acquiring, which is again one of the specialties that we offer from an FSS perspective, EPP and buy now, pay later kind of mechanisms, instant discount, digital lending, all these are there when it comes to smart stores, smart merchants. Smart cities, again, drawing a page from developing countries, smart cities are actually going to propel retail digital payments in terms of consumer to government, government to consumer, collections and payments that hitherto are possibly cash and checks would move towards a digital format. What about the chances of having one common card for all practical purposes within that city? With reference to retail payments ecosystem, I would say that, we have to be very mindful of what challenges, opportunities are there for the different players in the ecosystem. And, when we talk about an ecosystem for retail payments, there are the merchants, there are the acquirers, there are the issuers. Talking about merchants, their challenges would be considering what's going on today with the world, in the world because of the pandemic. How do they focus on footfall? How can they make it? How can they convert their business into making it far more asset-like? For example, can the shift happen from a physical POS to an EFT POS or a mobile POS? How can they cater to the omni-channel requirement? Again, it's very, very getting popular. The ability for a consumer to do something online, come back and transact in a physical store. Consumers want frictionless payments, frictionless. How can the transaction be made frictionless? What is it that the merchants have to do at their end? Choice of payment methods. More importantly is the need for immediate settlement. Acquirers. Again, when I talk about acquirers and issuers, banks are also included in that. As we all know that, they're not just banks. There are a lot of other players who can be an acquirer. They can be an issuer. Now, from an acquirer perspective, there is a lot of innovation that is required. And again, there is often neglected segment, which we call as the mass segment in merchants, how to make those long tail profitable. Which means that the answer is that we have to necessarily look at the SME segment to make it a worthy proposition. Like CK Prahlad in those days talked about, there is money to be made at the bottom of the pyramid. So SME segment is something, how can they make it profitable? Risk mitigation, and it's always about scale. So acquiring is always about scale. When it comes to issuers, shrinking revenues, because, eventually we are seeing payments moving away from the card rail to an account rail. So what happens? So they have to constantly innovate. Today's times, there could be possibilities of higher delinquency. How do we deal with higher delinquency? Easy payment with strong analytics to the consumer or to their customers. How to become top choice and contactless integrations. And speaking of which, one of the strategic payment themes that I intend to talk today is about contactless payments. Then you have the other four ecosystem partners. And this slide is, mostly from a retail payments perspective. Schemes. Again, I wouldn't say that schemes are undergoing an existential threat, but obviously they are under pressure because many markets, they want to make sure that they set up their own domestic schemes. So this conflict of domestic versus international, how are they going to deal with it? Pressure on revenues and fees. Constant innovation is also required. Similarly, from a processor perspective, which is the industry that we belong to, is that it is no longer a boring back office function. There's a lot of expectation from processors and enterprise-grade platform technology companies like ours, how to build scale profitably. Patience is required as the long-term shift towards online and contactless payments. So moving towards a platform-based model, and then to be ready on a cloud, off-cloud kind of stuff. Neobanks and then banking avatars. So these are two different flavors. Neobanks ride on a partnership with a bank. Banking avatars are those like, for example, a digital extension of a traditional bank. So all these are players in the ecosystem, and it's very, very important to recognize how they will deal with challenges and kind of address those opportunities. What are the 5 payment themes that I intend to address very quickly, which is of relevance to Saudi? The first one is digitizing mass transit, contactless issuing, long tail merchants with an acquiring perspective, real-time payments, and then last but not the least is open banking. We heard a lot about open banking in the context of value-added services and payments. And by the way, FSS is a full spectrum player when it comes to all these 5 strategic themes. Speaking of mass transit, digitizing this means more penetration. Real innovation is here because end of the day, this is very close. These are small value payments, very close to how a citizen or an individual would deal with cash. It feels like cash, but you're actually taking away cash. So if there is innovation happening with all these 7 metro rails coming up, we believe that digitizing mass transit can actually play a lead role in achieving the 2030 vision. Micro ticket size, potential to, and this by and large, from an issuer perspective, has the potential to become the largest prepaid, quite frankly, anything to do with mass transit. So converging different schemes, if there are different cities and different metros, how do you converge those different schemes? So, and what it is required is from a perspective that any card should have both a debit card, systems needs to be upgraded so that it also has the prepaid feature in functionality into those cards. The second strategic theme is contactless payments. Roughly about 40-45%, I believe, are already in KSA from the perspective are contactless. These are low touch, no touch kind of payments. Then what the basic requirements are, it has to be simple, seamless, secure, and intuitive. And when I say simple, seamless, secure, and intuitive, the number one priority is convenience for people like you and I. So convenience, as long as we talk about convenience, security, how do you make sure that the transactions are secure, risk-free, superior payment experience, all these help in the growth of contactless payments. And we believe that this is a big opportunity from an issuance standpoint. Long tail merchants, I always say that these are the overlooked category because traditionally the acquirers or the aggregators will always look for the large merchants. However, like many countries, including India and in Saudi and in many other developing countries and in G20 countries, the fundamental drivers for economy are these SME segment. So how do we make sure that we bring this SME segment as part of your entire digital ecosystem, payments ecosystem, right? So traditionally, historically, banks have always been averse to extending credit. So they face funding challenges. How do you enable them to make sure that they are part of the acceptance journey? Government has a lot of programs in Saudi, deferred payments, point of sale related incentives. They've taken away fee transfer between banks. There's a lot that is already happening. However, there is a need to drive the strategic theme by way of how we can make sure that acquirers can participate, get more SMEs online, and get them onto this digital bandwagon from a payment perspective, remove the barriers to integrity. What is the need out here? The real need out here is to make sure that the banks are able to offer acquiring as a platform or a service. In other words, processors like us can actually play a very important role in that journey. That's why this is a continuation of the previous slide, that how do we make money from a long tail merchant's perspective is this program called Embark, where we believe that this is an end-to-end acquiring, where we're talking about getting the SME onto the payment bandwagon. So it is about building a very strong acceptance infrastructure, which means that this SME segment is also a very important segment. Last but not the least, the fourth strategic theme is this faster payments initiative. Faster payments is about making sure that it's moving away from a card rail to an account rail. So this is the reference architecture that you see on the slide that we believe is very important from driving the agenda for payments. And the India UPI experience is a trendsetter. We were able to articulate the different payment flows and the powerful user journeys. So Saudi is already doing something. 60 countries globally are looking at payment transformation from a real-time faster payments initiative. Fortunately for FSS, we have a very compelling provision at a central level, at the national level, and also at a PSP level, at the beneficiary bank level. Open banking, we've heard a lot about open banking. This one slide talks about the third-party providers. I'm not belittling the discussions that has happened on open banking since yesterday. However, what is of relevance from an FSS standpoint is payment initiation service, open banking. How are we doing it? So open banking as a service as a third-party provider, that the connectivity out there, that's the reason where that's the play that FSS has. So what do we monetize? Essentially, digital enablement accelerators and enablers. We feel that there are a lot of changes happening in all these 6 sectors. So whether it is open banking, digital commerce, voice commerce, immediate payment and settlements, securities and analytics. When we talk of payments, there is a very strong need to make sure that security is addressed. And then fundamental to all that is analytics. Payment analytics is also going to be a lead indicator for serving different customer aspirations. Retail payments landscape, this is where we operate, right from the spectrum, issuance to payments processing, merchant acquiring, talk about offline, online, point of sale, or card not present, which is your payment gateway, digital security. We talked about digital banking, smart back office reconciliation, analytics, a very strong area, and then we talk about payment processing. So what is FSS trying to do? FSS is a full spectrum payment technology player. It's not just as a license platform, license as a solution. We also offer it as a platform. We are processing payments. And the good news is that we are already working with customers in Saudi. We have a payment gateway customer. That bank is a payment gateway customer. The Saudi Payments is implementing the terminal management system from FSS. And we are also partnering with fintechs out there to offer prepaid as in conjunction in partnership with banks. So net, we are an end-to-end provider. Companies like FSS can actually complement the journey of KSA in that 2030 vision. Thank you so much.
Christian, thank you. Very, very interesting. It's actually lots of information to process. We had a few. Looks like we got some questions coming through, but I think just due to time, we'll collect those questions. If you could join for the big Q&A session at the end, we'll collate those. We can maybe share them with you before as well, so you got an idea. But wow, lots of information actually. A very relevant topic here in the UK as well. So yeah, that's fantastic. Thank you very much. Really interesting, great insight.
Thank you.
Thank you, Christian. Thank you. So everyone, we're approaching our first break. So as mentioned before, the great thing about events like this is the opportunity to network and connect. We're in unique times. We're connecting through portals and online, but there is still, there's a human being at the end there. So it's someone you can get to know, albeit through technology. But we're all technologists as well, so that's fantastic. So look, I'd urge you during the break, go to the sponsors and partners tab, go to the networking zone. We also have some polls where you're able to sort of do some votes, and that feedback is fantastic for the organizers, but also to get a feel for how these topics are landing and any insights you might have yourselves around this. So please go to the portal, engage, connect, speak to our sponsors, speak to our partners, make some friends, make at least 2 new connections today in this break. Humans, the human interaction is something you can't underestimate, and we've been missing that a lot recently. So let's do what we can and engage and connect. So it is now, we're approaching I believe 11:20 in Saudi. If we take 15 minutes, so if you come back sort of roughly between 11:30 11:35, we'll be kicking off the next session, which is a very interesting topic. So connect, network, and I'll see you in 15 minutes. Thank you. Hello and welcome back. So I hope you had a good chance to do some networking, to connect, to reach out to some of our sponsors and partners. So like I said, it's the best thing about these events I've found. I've been attending things like these for many years, and the relationships, the connections I've made are definitely the most fruitful thing about it. However, we're also getting some fantastic insights from the conversations today. Very relevant, lots about customer and the role that technology has to play in facilitating the transitions and the transformations that we all have to make, be it if you're in Saudi, the UK, or anywhere else. So look, the next panel is a really interesting one. So if we could just ask our panelists to get ready to come on. Now, before we get into the conversation, I'd like to introduce Neha Goel, who's the Sales Director for Financial Services at Comarch. Nihal's going to be facilitating a panel on transforming banking customer experience fully remotely. So as a passionate tech evangelist, Neha is currently in the Comarch financial services sector and is responsible for expansion of Comarch's innovative fintech solutions for banks and FIs in the Middle East. Neha, over to you. Welcome.
Thank you so much, Amit. How are you? Thank you so much for this warm welcome. And I welcome my panelists as well for this discussion. Let me give a quick introduction of who we have today with us. We have Ms. Eva Kosturkiewicz. She is a senior executive with extensive experience and broad expertise in banking, both in Europe and in the UAE. She's passionate about turning customer experience and strategies and customer insights into meaningful outcomes. Welcome, Ms. Eva. We also have Ms. Millie Gillen. She's a native New Yorker and Singaporean who has a wealth of knowledge about innovation and strategy and combines this with the use of data, design thinking to reshape the client experience and innovation. Welcome, Millie. And we also have with us joining Mr. Abdul Mohsin Al Mulhim. He is the Chief Marketing and Customer Experience Officer of Bank Al Bilad. In his current role, he focuses on creating high-quality customer experiences through journey mapping and cultural change. With his customer-centric mindset, he also has successfully led Al Bilad to be one of the most prestigious and influential brands in Kingdom of Saudi Arabia. He also is an advocate for an experience-driven economy and has over 25 years of experience holding several senior leadership roles. I welcome my panel today. So, coming to the topic of customer experience. We have seen before the pandemic itself, customer expectations were changing. And through digital and technology transformation programs, banks were already shifting the way they were banking and how they were delivering products and financial services to the consumers. Especially, we saw the adoption of the openness to SME, looking after creating a dedicated SME banking portfolio in the UAE, adopting omni-channel channels and creating multiple digital touch points. We've also seen increased focus on customer journeys, data simplicity, and personalization of services. So I would like to start with Ms. Eva. What do you think, in your experience, how this pandemic has, impacted the customer experience? What has, changed? And you see will change, keep evolving? Miss Eva, you're on mute.
Yes. Hi, Neha. Thanks for the lovely introduction, and I welcome my fellow panelists. And good morning, good afternoon, good evening, everyone, wherever you are. It's a pleasure to be here, and it's a pleasure to be part of this exciting event. So thanks for the opportunity, and thanks for the question. I would say that it's this question itself, how COVID has impacted customer experience in banking and beyond is so broad in itself that we could probably spend the whole time that we have dedicated to this panel just discussing that aspect. So I think, and I'm sure a lot has been already said throughout the first day of the conference and until now. So like I said, there are many aspects. So I thought of just picking the two that, from my perspective, as someone who's really passionate about customer experience and who deals with it on a daily basis, working with all my stakeholders in my organization, FAB in the UAE, to create the best possible customer experience, the two that are, in my view, the most important ones. And this is about not surprisingly, because of my passion for customer experience, these are relationship of the customers with the banks. However, I'm looking at it from two dimensions. The first one is physical relationship, and the other one is emotional relationship. And when it comes to the physical relationship, it is very much about how the banking, how the way customers have been banking with us as banks has changed. And as you have said, Neha, the change, this transition from physical, brick and mortar to digital channels, this has been happening, of course. So COVID has only accelerated it. And actually, I think some of the organizations has actually they did really, leapfrogs, and they probably were not even aware that they are able to progress and transition so fast in terms of moving their customers to digital channels. So, the lockdowns, the inability to use branches, unavailability of some ATMs, maybe even this has really moved, customers very quickly to the digital channels. And I would say that there is another interesting aspect to this as well, because I think that the certain phenomenon or conviction that digital channels are only for the young generation or primarily for the young generation has also been broken, and we have also seen a surge of generally the usage of digital channels, including increase of the usage of these channels by some older generations. And I have been speaking recently to my friend who said, well, can you imagine my dad, who's so far been using his phone only to make phone calls and take pictures, has suddenly downloaded bank mobile app and is quite enjoying it, and maybe he's even opened his Facebook account and maybe become an influencer one day. So this is the level of change, and I think that's pretty obvious, so I will not continue on that also in the interest of time. But the other aspect that's very close to my heart as customer experience professional is the emotional relationship that I have mentioned. And I would look at it in three aspects again, which is empathy, support, and trust. And this is not accidental. That sequence is not accidental, because I think the moment the COVID kicked in, we realized that a lot of our clients, customers have found themselves in a very difficult situation, being of a job loss or salary cuts, or impacted by being contracting COVID. And I think that empathy aspect that anyway customers were looking from the banks already before has again increased in significance. So showing that we understand the situation, being proactive as well, and that takes me to the support aspect, which is being proactive in supporting customers in their difficult life situation. So it can be either through transmitting the stimulus from the government. In case of the UAE, it was a program that was rolled out by the Central Bank of the UAE called TES. So economical stimulus to support customers, which we have also been part of, and we have made sure that we can support our customers as much as possible, or through providing some extra funds or some relief in terms of their payments. So I think a lot of focus has been around that aspect. And last but not least, there's this trust aspect that I have touched on. And I think in times like that, we have realized more than ever that really customers look, at their banking institutions and want to trust them and want to make sure that whatever is being provided to them is the right thing, is the right option, is the right choice for their current, life situation. So I think these are the key thoughts that I would share.
Well, you make very interesting points, and I'm sure, yes, the trust and empathy side, because this pandemic has taken a heavy toll on everybody. So I think banks have played a pivotal role in creating that, trying to create that balance between health and wealth, and they are trying to do that. I would like to move on with Mr. Abdul Mohsen as well. What are his views on, how you have seen in Saudi Arabia, specifically, how it has been impacting your customer experience and digital adoption per se?
Well, thank you. First of all, thank you all for having me there. It's my pleasure. Good morning and good afternoon and good evening for everyone is here. I think this is very important for all of us. I believe what happened to the world is something unique, never happened again, never happened before, and we hopefully it will not ever happen again. And we pray and wish everybody safe, and inshallah we can see that the things are moving in the right track. At least we could see what happened in the Middle East and in Saudi Arabia. The numbers is very good, and things are getting, to the normal. We could see even the economy scale is getting improved, by the time, and things are. We could see from the number is growing and number is getting better and better. Going back to the question, I think my colleague Eva, I think she didn't left anything for me. She covered almost everything. Okay, I could see the impact happen, and I would like in this three streams. First one is that in the banking industry, and I would talk about Saudi Arabia and also in specifically in our organization. I think what happened or how it's impacting it give us the ability to reprioritize, our wish list. Of course, the Bank Al Bilad or any bank or even in any industry, you have like list of product, list of wish list, lists of like dream things. When the pandemic has happened, we again look to our priority list, and we prioritize the list where it went to the side of the customer, how to make it more visible for it, how to make it easy for him from anywhere. So that particular piece of process, it affects the customer experience very heavily and positively, of course. In customer experience in any organization, of course, you dealt with everyone. And of course, what is important for customer experience, probably to other, stakeholder, maybe it's not important at this time. And during the pandemic, the good thing is that the priority in the whole organization and the whole industry, it's become one. So the priority become like unique. Everybody focus in this priority, which is like the customer is very important. He needs to do everything and his health as well. So everybody focus on this one. So the priority of the process, I would talk about like even the priority of the new product, the new process. Improving the process and how to deal with the getting the product, getting the service. Because if you think about, okay, I'll give one example. For example, the SAMA, the Central Bank of Saudi Arabia, when the pandemic has happened, usually we have something called like the customer update information. There is a regular regarding the KYC and this one. When the pandemic has happened, they give some, they allow more relaxed process for the banking industry, where they could relax it and make it easy for the customer, of course, without jeopardizing the principle of the KYC. So that's affect the whole things. So this is one. The other thing also, during the pandemic, it was a very good timing for more digitalization. You could see some of the industry, which is like working with the banking industry, they never think of digitalization. They never think of like, I would say, take away, I would say, process on their product. So it makes it even much easier for us, for the banking industry. So it's become much easier for us to connect. So more digitalization, it means more, of course, efficiency, more easy process for the customer. But at the same time, when you move into more digitalization, you need a very, very strong customer experience. customer when he has any problem in the, for example, in the application, there's some error message. You need to be ready how to answer this one. What is this one? What is this? How I can solve it? So this is a very important. The other also, the third one impact also the customer experience, which is for us, it was a very tremendous and important. The improving of the process on the customer experience when it comes to how to deal with the customer on social media, when it comes to how to deal with the customer when he comes on the other media, because the customer can interact with you from anywhere. Your branch, especially during the, let's say, the lockdown, your branch is closed. He can't deal with any banking service except through these devices. So also it allows the banking industry to like expedite and give priority to this process. Some of the process, I can tell you, it was never, ever even approved or get appreciated or get, I would say, pleased by anyone unless what happened is happened. So that's a very good. So I would say there is, I would say, good things and pressure from other side. The good side is that this is allow us to get everything done quickly and fast and make the customer happy. The other side, which is it is all the organization, they need to be ready, not 100 times, not 200 times, because the customer doesn't have anything except the customer experience to support him, because he doesn't have anyone to talk to him. He doesn't have anyone, and he doesn't want, because he gets used to this. He could get all the service with a touch of a button. So this is the three things I would say it is impacting the customer experience. Yeah.
Thank you, Mr. Abdulmohsen. So definitely behavioral changes that is going to come from the pandemic, there probably is going to stay on for a longer time, being with the digital adoption, which is a great point. And yes, like we say that, relationship managers have gone to video conferencing with their customers, giving them still a human touch. Ms. Gillen, are you with us? Would you also share some, interesting, thoughts and views on how you have seen and supplement the colleagues here in terms of customer experiences that has been changed through COVID-19?
Sure, absolutely. So first of all, thank you for having me, and I hope everyone is staying safe and healthy. When the pandemic started to accelerate in East Asia, what we started to do was think through how can we start to help our customers beyond just the basics of here's more products or here's a loan so that you can make ends meet. It wasn't necessarily about making money first. Of course, it's always important, but especially the time right now, it's around empathy. To my colleague Ewa's point, it's definitely about empathy. That is the number one thing about customer experience. The other thing that we started to do was really assess what are we doing and what are our competitors doing in financial services, but then what are our competitors from an experience perspective doing to help their clients go work through COVID. And so what we did was start out with Maslow's hierarchy of needs, and we tried to assess, okay, what are the basics? What are the things that are very more of a hygiene type of thing, such as how do you just do the basic banking transactions, whether it is checking my balance, transferring money, paying my bills. We recognize that most banks and most companies, they really did focus heavily on the hygiene aspect of things. And then what we also noticed was that a lot of banks started to move up the hierarchy of needs and focus on the financial aspect. How can, so for example, some of the RMs, the relationship managers and financial advisors, contacting their clients to see, are you okay? Is there anything that we can do to help? And do you need a loan? What's going on with your personal situation? But then what we recognized was this was about where most financial services stopped. And at the same time, even though customers could not necessarily voice their needs, because when you're in this pandemic, how can you know? It's paralyzing. How can you know what you don't know? How can you know what needs that you have to survive, just day-to-day basic survival? And so what we wanted to do was turn things into empathy and really understanding, for example, what are the specific needs of our customers that they can no longer fulfill, whether digitally or physically. One example is that we had a client in India. She was 94 years old, and her son was in the US, and he's not a client of ours. But he called us and he said, I can't get to India to my ailing mother. She needs cash to survive at the time when India was announcing there will be a complete shutdown of the entire country. But at the same time, she needed cash to help survive, pay for food and take care of her staff and the people in her household. And it was the difference between choosing life or death just to go to the bank branch to get that cash. So what we did was we are so lucky that some of our colleagues feel so empowered and that our leaders give empowerment to these colleagues on the ground who put their lives at risk, that they decided to look at our process and understand how can we re-engineer this, keeping into account the risk, the regulation, fraud, etc., and not trying to discard that at all, but taking that and how can we re-engineer this process so that we can get this money physically to this elderly woman who we should never put her in a situation to choose between life and death in terms of something as basic as getting cash. So we tried to look at things from more of an empathetic perspective, and we didn't just stop from there. What we ended up doing was moving up to the top of the pyramid and looking at customization. What types of customized experiences could we create in the COVID scenario? So at this time, at the beginning of the rest of East Asia and then the rest of the Western world and the Middle East, now starting to see an increase in cases of COVID. Earlier this year, China started to see a decrease in cases, and they already went into mass creating PPE supplies or other types of necessities that the rest of the world had an underproduction or had not enough supplies for. And so what we recognized was one of our customers called up one of his relationship managers and said, I have an excess amount of these supplies and this part of the world needs it. I have no way of getting it there. I can't get their money cannot be transferred to me here so that I can ship it there. Please help. And so this is not our normal day-to-day business of shipping PPE supplies, but our relationship manager went above and beyond her duty to try to facilitate the international payment from abroad, as well as to facilitate and secure the proper and speedy shipment of these essential supplies to the places that needed it the most. So what we did was we recognized that, yes, there is the basics that everyone can do. And the initial stance is, how can we move from physical to digital? But then what can we do above and beyond? Because at the end of the day, we are a large organization, and just working in financial services, we owe it to those who are in the community that we have a footprint in to go and be there for them through the good times and definitely through the bad times.
Fair point, and I could completely agree with you. With this digital era that has been, embarked upon, it's very important to keep that human touch still, and with your customers, with in your industry. And I think we play a very pivotal role, being from the banking services industry, to keep that balance on. Now, moving on, we understand that customer experience is evolving and how it has been changed, and we are all taking one day at a time. But I've also seen it's becoming very mandatory and very, very important to become transparent with your customers. People lose faith and lose trust in banking services, because usually the whole notion about banking services comes out to be, oh, they would just want to make money. Correct. So how have you seen, or what are the steps are you taking to maintain that transparency while you are meeting and trying to adapt to the customer needs during this COVID? So I would probably, Millie, you are with us, if you could supplement, and then we can move on to our other colleagues as well.
Sure. So one of the things that we are doing, we start with the small things, and eventually we evolve up to the bigger actions that we can take, because the small actions, while they may be considered small, they end up being the most meaningful. So for example, in some of our branches, we're handing out hand sanitizers and face masks, because at the beginning of the pandemic, those were instead of paying a $1 for hand sanitizer, it's now $50 for a small bottle of hand sanitizer. So even though we invested in that, it still went a long way. It was very meaningful. It still showed we're here for you. And then we evolved up to more larger initiatives, if you will, around really making sure that our customers are okay and being proactive on those who have debt with us to see, do we need to help them to refinance? Do we need to provide any payment holidays? What can we possibly do to prevent them or to help put enough of a safety net to help prevent mass default on loans?
All right. That's a fair point. And I would like to also have Ms. Eva just to supplement what her thoughts are. I think we just have 10 minutes left. And we have another few discussion too. If you could share some thoughts about what steps you're taking to maintain transparency with you while you're meeting their needs.
Thank you. Thanks, and great thoughts so far. So I would say that building up on what Mili said, I think that element of proactivity has been very important for us, and I think it'll continue. And one of the aspects that we were really making sure is we are taking care of was communication, clear, transparent, timely, relevant, personalized where possible communication. And I think especially in the beginning, we were all literally lost. We had no idea what's going on, both us as the organizations, and I'm not talking only about banking industry, and our customers. And we are both, customers and bankers. So we were, I think, looking from both sides. We were really looking, trying to understand what's going on. How should I now deal with you as a bank? And we were making sure that at each step where we, had clarity on how we can guide our customers, our clients, we are really reaching out to them, also making sure that the channels that we are choosing are as relevant as possible. And that shift has to also be made very, very quickly to adapt to the changing environment. I would also say that another aspect in terms of keeping the transparency is the education of customers. And I have touched on the aspect of that breaking that aspect, that element of stigma of digital technology being just for the younger generation. And with that example that I have given of the father of my friend who's moved on to starting using mobile banking. For some, of the customers who were kind of forced, it was not by choice, but by circumstances, they had to move on to using digital channels. Some were, picked it up quicker, some not so much. So I think also adapting really quickly in terms of how we educate our customers, how we support them in terms of understanding. And the ease of use, the availability of the basics, the availability of the functionalities is one aspect, but guiding customers through how to use them, how to, navigate through your financial, needs and daily requirements was very important. And another aspect that I think is absolutely indispensable is organizational culture, because it's from within that we actually, create that customer experience. So again, we are really working hard to make sure that our service culture, our culture is aligned in terms of the new norm, in terms of the new circumstances for us, for our clients. And that the message is consistent, is regardless of whether you are a frontliner or you're a support function, back office. We were really making sure that we speak one language and that we understand the journey. So that communication that I have mentioned to the customers was also equally important to our employees, so that they understand what's going on and can help support customers as much as possible throughout these times. And I think all of this and many more, this definitely leads to bigger transparency for the customers. One more element, I think, which we shouldn't also forget, since we are discussing the digital aspect here, when we moved to, the surge to digital channels has been amazingly high. And I think that's equally the surge in cybercrime has increased. So I think two aspects here also to add. We were really making sure that this educational aspect, not in terms only of how do I use mobile banking, how do I use online banking, how do I use mobile wallet, and so on and so forth, but also how do I protect myself from cybercrime. That was also critical to build, to maintain and strengthen that trust that customers have with us. And I think that this is a very, important investment, so to say, that we as organization are making to build the trust, to show the customers that we are here for you in the tough times, and we've done, as much as possible to support you, to then, be with them and when the times, get easier and improve.
Thanks, Miss Eva. So what I summarize is, right now, the key probably design principles for serving distressed customers during this time is the awareness, is simplicity, is transparency, setting up clear expectations, and probably frequent status update with keeping all the security aspects in mind. Moving on to, Mr. Abdul Mohsen, we have been talking about how customer experiences has been changing during COVID-19. What are our views on the features that we are adding right now are, that going to stay with us in the new normal, probably the post-pandemic? What do you think? Whether, when the pandemic subside, what would be the features that will probably be staying with us and become the new way of banking with us? Mr. Abdul Mohsen?
Yeah, thank you. You move to the third question, huh?
Yes,
okay.
Yes, in interest of time, yes.
Yeah, I'll just touch on just the second question very frequently.
Yes.
I will not add more than what my colleague mentions. Like, we invest heavily in the country itself, in Saudi Arabia, all the banking industry. We invest heavily in the awareness, and the 24/7 services around the clock, where, as my colleague mentioned, the things were moving like by clock. Every time, considering Saudi Arabia is a large country, so was lockdown starting east, but central is not there. So we were very transparent with the customer. Also, the awareness and education was done in all languages, all possible languages. Talking about Bank al Bilad itself, because we have the remittance arm, we are the largest remittance arm in the country. We have to talk to all the customer with all their languages, almost 9 languages. We were pushing all the services around the clock. Other thing is that the activation, we were focusing also on the activation in terms of how things should be done. And then, of course, as my colleague mentioned, following the guidelines from Ministry of Health, where the checking of the temperature, the sanitizer, having everything is there, the mask and everything was available there. All the, the education, signage, and this one was there, and in no time. Moving the third question, of course, the new things that they will be focused more on automation. This is what we promised the customer. There will be more automation, much easier life. People, if we talk about Saudi Arabia now being an individual or a company, you can open your account from your mobile. You don't have to see anybody. You don't have to provide any document. You don't have to sign a single paper. That's a new and tremendous change in the customer experience. In the beginning, it was done for individual. Today, it is done even for corporate level, for SME. Imagine that you start up your company, you open your account through a single request. If you have a shop, you receive your point of sale within a time frame. So this is the new things that come into the customer. Also, we are introducing in the banking industry more product focusing and improving the customer experience. At the end, everybody is working around how make this customer happy, which is, we call it the big boss. The big boss is not the CEO, is not the chairman, is not the, let's say, the board of directors. No, the CEO or the big boss is the customer who's paying, who's like getting him happy. And as my colleagues said, they were going extra miles helping him. I believe, yes, it's happening in every organization. We do have also, like what my colleague said, through our private relationship. We had one customer who's in the private banking. His daughter she was in UK. She's not able to come. Of course, the government helped, and bringing her out. But the RM itself, he was like following up himself, using every connection, everybody he knows within the organization and he was so happy, because of this one, because the RM and the bank is going beyond their, so there will be more products that make the customer journey, the customer experience much happier. And of course, the pressure will be in the what you call it, after sales, or how to tackle the customer. They will be much easier, process for the customer to be happy. And we could see in the Saudi Arabia there is a big transformation in everything. Today, we have now the tourism. Everybody can apply within half an hour. You get the visa. You can come and visit.
Correct.
So will of course, if you look to the banking and it's become the middle, and it is the skeleton in everything. So we are in the middle. We are like the what do you call it, the enabler for everything. And this is what we promise.
Agreed, sir. Agreed. Completely. I think what our panelists today discussed, and I think they all had similar views, and I think we're working towards a common goal of being, customer centric is our key takeaway, and any features that stay which are customer centric, keeping the responsibility that the banking services industry that has for the economy, I think they are going to stay on forever. In interest of time, we've finished. We passed our 30-minute session, and I think I would pass it on to Mr. Amit to take it over and see if there are any questions from our audience. They can, have our panelists answer. The floor is yours, Amit.
Thank you very much. Really, really interesting conversation. Really interesting conversation. I think we've had a couple of questions through, but I think in the interest of time, if we can, we'll park those for the big Q&A session at the end. But really, one of the things, as I was listening to what you're saying, there's, you could argue that COVID's had that impact on society anyway. But it's what's the role we want to play as organizations in society, and how can we actually help? And it's interesting, we're talking lots around technology. Technology is not human. It doesn't have that human connection. And similar to the conversations we had this morning, it facilitates connections. It facilitates assistance. But actually, there's a person at the end of that, and that person has very specific needs and quite unique needs. So yeah, we've seen that in the UK as well. It's really sort of shifted the mindset and brought the customer very much into focus again. So look, really interesting conversation. Thank you all for your input. Thank you, Neha, for fantastic moderation. We will move on to our next panel now, but if you join for the big Q&A session at the end, there's a couple of questions that came through, and we can all engage at that point then. But thank you very much, everyone. Thank you. I know you've joined from very different parts of the world, but fantastic, really engaging conversation. Excellent.
Thank you so much.
No problem. No problem. So look, this now brings us on to our last but not least panel of the conference. And this is a very, we've talked a lot about kind of retail customers, but within that we've had quite a few conversations with regards to corporate. And the topic of our next panel is corporate banking driving innovation in response to COVID-19. So moderating this panel is Andrew England, Director, Head of Strategy at IGTB at Intellect Design Arena Limited. And a bit about Andrew. Andrew is a member of the main board of the Intellect Group and Director of Strategy for Intellect Global Transaction Banking, IGTB, and has over 30 years of banking experience, having spent his entire career in this domain. So Andrew, really keen to hear what's going to be discussed in this panel. The floor is yours.
So Amit, thank you very much. I hope you can hear me okay.
Yep, loud and clear. Excellent.
Great. So it's a real pleasure actually to be moderating this final session of the summit. I'd like to perhaps just start with introducing my panel. We've got three very experienced professionals with us today. So starting with Basil Al-Ayola. He's the head of middle corporate banking for Al Rajhi Bank, a very seasoned corporate banker, and actually is probably quite unusually had the experience of working in many of the corporate clusters, so SME, middle market, and large corporates. So welcome, Basil.
Thank you, Andrew.
And then I'd like to sort of move on to Paolo Barbacino. He is SVP, head of multi-channel banking for ENBD. And of course, this is a critical role that he has in terms of defining the strategy for channels and the group, as well as acting as a key pillar to ensure that the bank continues its very innovative journey in the region. So Paolo, welcome as well to the panel. Yeah?
Thank you, Andrew. Thank you.
And then finally, Baha Khashoggi. He's country head of micro, small and medium-sized enterprises for Bank Saudi Fransi. Again, an experienced corporate banker, 20 years plus of corporate experience, has got some very good, if you like, qualifications in terms of accounting and finance, and is also actually a board member of United Cooperative Assurance, a publicly listed company. So, Baha, welcome as well to the panel today.
Thank you, Andrew.
So I'd really like to use this this session to, again, just to remind the audience, we're talking about corporate banking, but the theme is driving innovation in response to COVID-19. And there's sort of three themes that I think I'd like to explore today. The first one really is how we might be expecting banks, corporate banks, to be redesigning their business in the wake of what we're seeing with COVID. And I think redesigning in terms of how they're looking at risk, and I'll ask our two corporate bankers to talk about that, but equally how they need to be looking at cost. And I'll bring in Paolo to provide his sort of assessments around that. I think on the risk side, whilst we're all aware that there's a huge amount of support coming from central banks, from SAMA in the case of the Kingdom. I mean, this is the case actually across many countries. And I suppose the risk question for banks is there going to be potentially a shift towards looking at certain sectors of the economy and prioritizing what we might be seeing as industries and sectors that might be healthy post-COVID, and perhaps not supporting others? So one sort of question I would have is, are we going to see a bit more discrimination going forward on the risk side or not? So maybe Basil, you'd like to share your thoughts on how the business model might be changing with respect to looking at risk, and actually are there some more innovative ways in which the banks are exploring risk or understanding risk with their customer franchise?
Sure, Andrew. And I think you touched upon a very important subject as we speak today. The matter at hand is a concern and ongoing concern, not only to the Kingdom and banks within the Kingdom. In reality, it's something that is faced by every lender globally due to the pandemic. That being said, I'm quite confident that most lenders have already developed their own programs as and when the support programs do actually expire and run off. They do have specific dates depending on what support program we're looking at, what part of the entire economy of the segment that we're talking about in terms of enterprise support. Now, how to tackle it is probably heavily reliant on the client base themselves and on the organization. So it is with much pride that we do within Rajhi have existing programs, even for segments that have not been included under many different various support programs by the government. So we have our own support program due to COVID and dealing with the post fact of it. So just typically coming in and stepping in today in a manner that deals with the current situation only and does not take into account all these stressed cash flows doesn't really help anyone. So the way to go about it, no matter what part of the world, no matter what industry we're looking at, is in reality easing cash flows at the meantime. Now, clients facing further difficulties might require additional financing, and that is something that has to be considered by lenders, because once you look at it, financial institutions in recent years have become and have adopted a partnership approach more so than a lender and having the leverage over the borrower. That being said, understanding that these circumstances are entirely unique and do require different measures and approaches to cater with these times. So yes, we might actually, and we do have a pre-existing approval all the way from the highest authority within our organization, Rajhi. And that also allows us to actually extend further facilities and limits if needed to help our partners in these times of crisis. So that is the way we look at it on a very high level. Going into examples or different industries doesn't really matter. That's when it comes down to a case by case. But on the larger level, that is what we have adopted. And I think that perception or that setup or that kind of framework exists with other lenders as well, because it comes as common sense.
So thank you, Basil. So maybe Baha, we've just heard there a view on what I would call a more integrated partnership approach, with the support mechanisms. But do you have any other insights around this risk parameter, looking at how there may be some more innovative ways in which banks are looking at risk with their clients?
Yes, thank you, Andrew. Good morning, everybody. Actually, it's a very interesting question. Obviously, COVID has changed the world. There will be, to answer your question, there will be economies or activities that will do well. There will be others that will slightly change, specifically in the kingdom. I think we can look at them around 3 pillars. The transformation from oil economy into the new economies that's not dependent on oil, so maybe more of exports, logistics, tourism. All of that is being developed in coordination with the second pillar, which is the Vision 2030 of the kingdom. And the third pillar would be around Saudi employment. So within these 3 pillars, we feel that that will propel what industries will be shaped, will be supported in the future. Having said that, I just want to maybe mention that the Saudi government, under the leadership of the custodian of the 2 holy mosques, King Salman, and the Crown Prince Mohammed bin Salman, have launched an unprecedented and unparalleled support of the private sector, most notably the loan deferral program with SAMA for SMEs, as well as the loan guarantee program with Kafala, and the many other government initiatives. Maybe we don't have time here to mention them all, in order to help stabilize the private sector and Saudi employment of the wake of the coronavirus pandemic and the lockdown. SAMA has been holding almost weekly meetings with banks to ensure that the private sector receives the right support. Our view is this is a temporary period until the negative impact of the coronavirus subsides. on the majority of the vast majority of SMEs or corporates until maybe a wide circulating vaccine or an effective remedy is put in place. So during this time, we're working really closely with our clients at Saudi Fransi Bank on rescheduling exposures, extending emergency support lines for payroll, other expenses, with the objective really of complementing what the amazing job the government has done to ensure that we weather the storm together along with the client. With having said that, the pandemic also have, in terms of digitization, have really accelerated many of our digital initiatives and enhancement that we have scheduled before, but now we're going full force to make sure that they're available sooner in order to service the client. And basically on video conferencing, maybe this is a new kind of thing that we really didn't feel that it would be effective, but really it turned out to be very effective. It's a good communicating tool that is efficient. We're not commuting to clients. It's allowing us to handle more with our clients. So it's an empowering tool. So I guess these are the impacts of COVID. I hope I answered the question, Andrew. Thank you.
Thank you, Baha. I mean, I think what I heard there as well was, if we take the risk dimension, I mean, the risk theme is sort of being set against the broader Vision 2030 in terms of, the responsibilities of banks to, promote employment, support key sectors, private sector especially. So that's an interesting view. You also mentioned, of course, promoting channels, which is obviously one of the results of COVID, and that I think gives us a nice bridge to Paolo. Paolo, one of the sort of observations I have on, let's say, around cost as a theme is obviously there has been this very strong push towards fast tracking digital transformation. And I think whilst this was going on pre-COVID, of course, during COVID, it might well have changed the view actually of digitization and what the expectation is. How do you think this can be managed from a cost perspective? Because obviously this requires investment, but at the same time, banks have still got this large cost base in terms of branches and support mechanisms, which is not going away near term. So is there an argument that says actually costs will be going up before they go down? What's your view around channels and cost in the current environment?
Yeah, I think it's a very strategic question, and I think that the COVID was a kind of an acid test to validate whether the setup of digital transformations in the financial service industry is indeed tackling the core challenges. And I would say that during the peak of the pandemic, when our branch network capacity was running at perhaps 10 to 15% of the size, and the back office was seriously limited in capacity, as well as the contact center. I think that that was the time where we had a chance to really understand what is working in the way we build digital transformation and what is not working. So it's we always, I think, understood digital transformation as having a focus on efficiency. And I think that what the peak of the pandemic showed is that there is quite a lot of work that we have to do on the side of the effectiveness. So I think that overall, when you think about efficiency, you think about digitizing to cost. So you put in place measures that will allow to migrate existing customer interactions from say more expensive channels to cheaper digital channels. So, and this has to do mostly with three areas: the balance and inquiries, the transfer and payments, and the after sale product management. I think if you look at what banks, how traditional banks perform over the peak of the pandemic, you see that in the balances and inquiries, yeah, it was a decent performance, but this is highlighted that, for instance, any inquiry that may have legal validity, so that is like can be used for having any interaction with a third party on a legal ground, there's still quite a lot of stuff that needs to be done. Transfer and payments, yeah, all banks do have a decent coverage of all transactional banking areas. But when you look at already at the after sales cycle, you see that our projects and processes are designed to support after sales cycle that is mostly a managed. So you interact with a branch staff. So on digitized to cost, overall, I would say the performance was a good performance, although there are areas where we can think about putting much more effort, bringing in advanced way of searching, of running inquiries, being more effective in the way we do transaction reconciliation. There are examples around the world where blockchain has been deployed that is like reducing the error, the operational risk in the reconciliation, and at the same time reducing the cost. So I think it's working, but there's still quite a lot of work that we can do to further increase the efficiency. Also because there are emerging models, particularly coming from areas like China, that are showing how a fully digitized everyday banking or transactional banking can work. But I think that the pandemic also showed that there is another area that is very important, is what I call digitized to value, and that has to do with whether we can acquire customer digitally in full, not only for simple products like accounts, but for more structured products, both in retail or in corporate banking. And then it's all about also the area of how we cross and upsell to our customers. So there we going back to one of your points, I think we realize with our own hands that we may have outdated propensity and risk models. We have limited digital targeting capabilities, and then the processes, cross and upselling processes, are not yet STP. So there is quite a lot of work in bringing them to an STP status, or at least to leverage robotic process automation to get to a point of having like a near STP. So there is quite a lot of work that we have to do. And then I think that is like a point that also Baha mentioned, is how we manage the relationship when we have a relationship that is like either remote or fully digitized. So here we said, okay, again, we are not leveraging data as much as we could. There is much more we can do in tapping into artificial intelligence to develop a kind of advanced driven outreach, AI driven outreach. We have very, very limited interaction capabilities. So, okay, there is like now video conferencing tools, but I think there is quite a lot of things we can do. And also it's about like upskilling our teams for a remote experience. So there are just like soft elements like tone of voice, or how we build up a remote interaction with our customers that needs still to be designed. So I think we perform quite well in the redesign business around the area of digitization to cost. There is quite a lot of work that we have to do in digitizing to value.
Great, thank you. So a very expansive view, Paolo, on digitization. I'd like to move quickly on to our second topic, which is actually how we're helping clients. I think that generally, obviously, on the corporate banking side, there's a lot of one-to-one discussions with clients, but I'd like to ask Basil and Baha what their views are on how can perhaps corporate banks take a portfolio approach to helping clients rather than this bilateral discussion, which is often going on in the banking arena? So Basil, what's your view on, quickly, just what your sort of thoughts might be on a portfolio approach?
Thank you, Andrew. Now, on that topic, I think it has been a topic of discussion of late. The main point and the main challenges are basically those that have to do with the legal environment and the enforceability that goes along with a portfolio approach, rather than having a bilateral, which is clear-cut and well-defined in terms of obligations and requirements on each party. That being said, once a specific, I think, law or ruling does actually exist that confines and actually clearly manages and mandates and points out responsibilities on all related parties, I think that approach would be very much applicable. However, in the meantime, given all the legal implications and subsequent financial or managerial resultant or consequences that arise, it has proven to be extremely difficult. So having it through your traditional banks and lenders isn't really ideal or an ideal setting to go about. Yet time will change. Time will tell, and change does happen eventually. We evolve as times and different circumstances come in. But in the meantime, I do not believe it actually carries much potential. But you never know what the future holds.
Okay, thank you. So there are obviously legal constraints. Baha, any thoughts from you on this portfolio topic?
Yes, Andrew, I think, I think we need to kind of reimagine corporate products and services in a way that meets customer needs. Banks around the world are shifting to a more digital portfolio approach more and more. There are constraints, but I feel that everything we can find solutions. It's definitely an empowering tool, especially with SMEs, because you can get economies of scale with a portfolio approach. Maybe I agree with Basil on large corporate relationships will continue to be managed the traditional way, as it's more effective to provide bespoke and personalized services to these clients. But really, for SMEs, we need to, first of all, start to know what they want, create for them the channels, the digital channels that address their needs, maybe build an ecosystem initially to provide payment solutions, and maybe add non-financial services, the regular banking, cash management, point of sale, but also maybe look even beyond banking, having services like HR, accounting, website setup, anything that a bank can cluster these services and give what these clients want. We need to understand their priorities. These can be different from one market to another, depending on market dynamics. So what would work in Europe might not work in the Middle East or Saudi, and vice versa. And then over time, banks will have a history of these activities and understanding of these payments and activities, and maybe we can create financing solutions that would once we reach that understanding. So if we were to put it, it would be 3 phases. You build the ecosystem, you do transactions for a couple of years to understand it, and then you start with the financing, whether you start with supply chain, other program lending, and then once that ecosystem is developed in a way, maybe large corporates would want to be part of it for so you could really, just reimagine what a banking will look like. If I can connect to the cost element that we had in the first question, you know, obviously digitalization should be able to improve cost, should allow us to be more agile in our business model, in our workspace. You know, maybe effectively applying AI and data analytics to effectively, you know, run our operations more efficiently, or, you know, target customers with the right solutions that they require at the right time. So there's a lot to be done. Maybe we don't have time to go over it in great depth, but this is an area I'm really passionate about. Thank you, Andrew.
Thank you very much, Baha, and I think your passion and interest is clearly being communicated. I think we're running a little bit short of time, so I will draw the session to a close. But I think you know, what we've heard, in at least around these two areas, is a great deal of optimism, actually, in terms of, you know, how bankers can really be looked at in terms of, we're here for the longer run with clients. We have a lot of responsibility to help them succeed. Our view in terms of, you know, the types of services and products that we might be offering clients, I think is expansive, more expansive than many of us are providing or thinking about today. And I think we also heard from Paolo the high expectations that we have around channels, whether it's around acquiring customers, whether it's around cross-sell and upsell, whether it's around automating processes, whether it's around post-sale services. This is a very, very wide remit. So from my side, I'd like to thank the panel. I think we all would have enjoyed a few more minutes, but time is running out. So Amit, I'm going to pass it back to you for the larger Q&A session.
Thank you very much, Andrew. Thank you, everyone. That's a very interesting panel, actually, and it's been great how we've kind of gone from technology to customer, retail, and then to finish on the corporate piece is a great sort of cycle to complete. Lots of questions over the last 2 days, so please, gentlemen, if you could stay on. We might actually kick off, given we're kind of on this topic, we'll kick off with a question for this panel, but we're also joined by some of our speakers from yesterday and earlier on. So like I said, lots of questions. I don't think we'll actually be able to get through all of them, but we'll touch on some of the key points. So this question, I think you kind of touched on it briefly. So, and this is very much kind of focused on the corporate piece. We probably only have time for sort of one of you to answer, so I'll kind of let you work that one out. Difficult virtually, but I'll let you work that one out between you. So the question we've got here: improved digital services. With this, the corporates are expecting to have reduced costs with their fees. How will banks manage to improve their revenue if fee income reduces? So who is keen to take that one on?
Whoever wants to. I think Fahad.
If I just rephrase it, you're saying as we are reducing our fees, how digital revenue are gonna pick up?
No, so I think as digital services improve, as corporates will expect to have reduced costs with the fees. So I guess this is how I'm reading this: is our corporate clients will be expecting reduced fees from the banks, i.e. cheaper cost of banking. So if that's the case, how will banks manage revenue stream if the fee income reduces?
My comment, I mean, when we mention digital transformation, it's about opening new propositions and new income streams by digital. I would mention 2 examples. I mean, for example, now everyone is talking about APIs, and I see it is still not that mature in the Gulf region, at least, how to monetize services between corporate, retail, and third parties through API revenues. But it is a whole economy that only will be delivered with a true digital transformation. So the point is, digital transformation will open for you new revenue streams, and yeah, and I agree, we shouldn't rely on the current fees, whether it is being decreased or not, but we are opening new doors, I would say.
Sure. Okay, cool. I think this is going to be quite snappy. So.
Sure. Ahmed, one very important factor to take note of is the actual reduction in cost structure. Once you go digital, your cost structure reduces substantially. So maintaining a good revenue stream or a higher profitability in terms of return is actually what is one of the benefits of going digital.
Amit, if I maybe do a parallel on the reducing in computing power and storage capacity. I mean, exponentially over the last 20 years, but really it did not impact negatively the industries. I mean, they adapt. It allows you to build on these and create new. Maybe new revenue channels that weren't existing prior to that. So actually, it's actually a plus to be able to deliver a cheaper cost product to clients, so that we can direct these revenues to even more newer products. Just as a nice parallel to what happened in other industries. Thank you.
Sure. No, thank you. Like I said, there's lots of questions. I'm going to try and get through as many as we can. This is an interesting one, because actually a lot of the conversation has been around larger banks and the impact of startups. There's a question here, which is, what advice would you give to the startups who are trying to partner with the big banks? Now, see, we have Shemek, who's joined us from yesterday's discussion. I think this was a question that was raised yesterday. So Shemek, could I just sort of throw that one over to you and just see if anyone else has an opinion after you've answered?
Sure, absolutely. I believe there is a few initiatives that are going currently, for example, in UAE, and we see this kind of trend where large banks are cooperating with the startups or the fintech companies and creating this kind of like digital lab where they're trying together to bring some new innovations and kind of quick adjustments, testing of new possibilities and functionalities within the banks. So I think it's a good point maybe to start discussing with some of the banks, and probably some of the banks will be as well very keen to go along with the startups to create such a collaborative space where they can literally try and test different kind of products or new functionalities that can be built. Because very often those startups have great ideas. They doesn't have big funding or investors to do that. And the banks on the other side are having difficulties to bring some new technologies very fast. So I think it can be like a mutual cooperation where the startups and the banks will be able to benefit from that if they set up the collaboration in a proper way.
Fantastic. Fantastic. And actually, if I could bring in Honey as well on that question, again, it's sort of crept us sort of between the two sessions yesterday. Honey, your piece was very much focused on sort of the banking world post-COVID. Any thoughts on how startups can engage with some of the big banks?
So from my experience, really, the fintechs till about a couple of years ago were seen as someone replacing the banks in many of the services, if not as a full bank. But in bits and pieces, in very niche areas, they had a faster, more nimble, and more customer-friendly service proposition for most fintechs. But unless they have the scale or the investment, they are unable to provide the impact to the market. So that's why we see the trend of where now fintechs are more service providers to banks and bringing those ideas in a much faster way to the general customer. Now the best way to be effective in those conversation is a few things. Number one, the real value that they bring to the end customer for a bank, because remember, banks have very capable and experienced people who have possibly considered the ideas that the fintech has come up with. Generally, it is the way it is executed by a fintech that is different. And if it is going to land in a bank and hit the legacy infrastructure, processes, and risk appetite of the bank, that's where the biggest gap generally is between a fintech and a bank. So I think keeping that in mind and building for solutions suitable and being able to pivot if they hit a wall is something very, very important. They can't be rigid. They can't be fixated on a particular solution and not pay attention to the cybersecurity risks. If they're into lending kind of fintech, then credit risk and operational risk. AML risks. So those are risks which are the first barrier to breach for a fintech when they talk to a bank. And the second part would be how much value does it bring to the bank and the customer? Once you're okay with the risks, so that proposition has to be absolutely clear. I read someone's LinkedIn status today which said rather than feature, look at benefits in a similar conversation. So features are something which almost every banking channel has plenty of features, but it is the benefits for the customer which really matters, and I completely agree with that statement. And the third and final piece is being able to use differentiation between what other people are offering versus or a bank is already offering. How do you differentiate yourself in a crowd? Because we are not in a world anymore where there are 10 or 15 ideas. There are hundreds or thousands of ideas for the same problem. How do you differentiate yourself? And I think the first 2 points are the reference points to differentiate yourself again from the crowd.
Thank you, Honey. Thank you. We're going to move on to our next question. This is an interesting one because this question actually came up yesterday when we were talking about the role that AI and machine learning might have in banking. But I actually want to direct this to Neha, Abdul Machine, and Eva, because the conversation around customer was very, very insightful. So this question is, have you managed to increase adoption using digital channels by all customers with AI and machine learning? Are customers really comfortable working and talking to chatbots or even an IVR system when they like talking to humans over robots? So I thought that's quite an interesting question given the customer conversation we had today. So Eva, maybe if we start with you, your thoughts around that?
Sure, thanks, Amit. I would say that and I think I mentioned this when we were discussing in our panel today, that the adoption of new technologies has been a bit slightly forced on customers in the COVID era. And I think maybe some who were a bit hesitant to start using them before actually were, as I said, forced to be using them and realize that it's actually not as frightening or difficult as they would have thought. So I think we can see the increase of the usage of these channels. But I think the important aspect is that we really need to make sure that this channel is equipped and is able to fulfill the needs. Because if we have someone who is hesitant to use them and their first experience with this tool is not necessarily that seamless or smooth, then I think that there is a risk of them not being willing to try it again. So before going ahead and enabling chatbots or IVR to talk to customers or customers interact with them, we really need to make sure that it's a seamless experience and actually covers all the key aspects that we could think of customers wanting to service through that channel, to make sure that the experience is seamless and that the adoption is gonna be easier. And I think also using customers panels or insights from customers to create these journeys through such channels is very important, to maybe test them with some smaller groups to just make sure that whatever is out there for the end user customer is really fulfilling the needs.
Fantastic, thank you, Eva. Abdul Machine, if I could move to you, the question around, do customers really want to be dealing with chatbots or humans, and how do we service that?
Yeah, thank you. As my colleague Eva mentioned, there is like a learning curve happening on the society itself, where the people, when they start using the things, when it is a new one. But if you look to the demographic, let's say, and I think maybe this is not the case from country to country or even at regional level. But if you look to, like in Saudi Arabia, if you look to the demographic and the ages of the population, you see that people are like they are hunger for new things. They are like tech savvy. They like technology. They like to deal with them. But I do agree that also having this machines or dealing with the systems, it requires a very, very solid, customer experience. Whenever the customer, have an issue or a problem, you could solve it, and he should feel that this is an easy thing. Also, one thing's more before, during the designing the process or this, it should be like an easy one. You don't have to do something like difficult for the customer, where he will think that dealing with a human is much better, or let's say the human will listen or understand him more. No, you need to design it the way, you have to think that you are in customer, place, and then easy, make it easy, make it easy process, make it. And I think most of the, let's say, products or things today has become like a very uneasy things. Maybe during the discussion panel when we talk today in Saudi Arabia in banking industry, now it's become easy for individual or even to the SME or a corporate to open an account from his mobile. So it's become an easy things with the, and I believe in Saudi Arabia and in most of the also countries, the infrastructure support this. The government also entities that support all of this, like the authentication, the KYC process, it will happen in a very automated way. So people, they will, or the customer, they will enjoy it. I have a doubt that the customer, if he is able to do it from his home with an easy process, he will not get into the human, or he will not be preferring to go to the human unless it's become difficult for him, or unless there is some services, maybe it will be down the road, it will be automated and become much easier. So I don't think it's a challenge for even for other industry, like the other industry who were equipped and ready to migrate to help the customer and services, remotely. They were successful. Some of the industry or some of the companies, they were not able to serve the customer. They failed, or maybe some of them they get penalized by regulator because he's not ready. So. And of course, some of the customer or some of the services, probably for the relationships, like the private banking, they will continue some of the things. You cannot automate it, or you cannot, make it. Yeah. So it's. But I would say now, we could see like today, like almost there is an increase of the usage, almost 100%, and some of the banks maybe they triple the usage.
Yeah.
So
thank you. So Nihar, if I can move to you just very quickly, because we'll have one last quick fire question. But Nihar, just very quickly, your thoughts around the role of AI, ML in banking, but also the customer experience and the customer.
Of course. I think my thought response to my colleagues here. And I think we all agree that during COVID crisis, we have observed a dramatic increase in the people interacting with the bank, the digital adoption. So people who were previously very reluctant to use mobile banking, for instance, had no option. And what is good thing about it that people are actually liking it. But at the same time, they may seem to be a bit lost. So it's very important to have proper data analytics in place, proper use of machine learning tools, make sure that we are touching some great aspects. So for example, if I talk about SME banking, it's very important to know cash flow forecasting, whether for next 3 months, what my cash flow looks like. And that's wherein I think AI is a helpful tool rather than RMs to work on Excels. So I think it is very important to start adopting artificial intelligence. Now, if I look at loyalty as well, which is, a great aspect for all the banks these days. And now that they are not only going with the traditional cards, but loyalty is all about whole experience. So having proper segmentations in place, how you contact them, having personalized data ready, out of the million KYC forms and NPS surveys that you fill out, what's the segment looking for? What's different areas that I can focus for? So that's where the bank is going to be very benefited by adopting the AI. Apart from that, what I have seen is at the same time, while some people may see the risk as once in a lifetime risk, but there are also others, probably some like me, probably have become more mindful that, there could be other, say, what we call it, black swans, or other, different, pandemics that we are open to. We never expected such or anticipated such times. So people, I think, including me, are now expect to invest more in being prepared for the future. So I think banks have a role right now in helping customers to become prepared, to become knowledgeable about, what are the other saving options, the investments. We look at insurance. We can look at, the income smoothing products that the banks can offer. And also they have this more, responsibility of educating their existing customer base on what different options are available, how they can help them. And that could be only possible if they have such, advanced technology to be, incorporated with their systems to help make that decision. Of course, it doesn't take away the main banking, expertise from who are there in the industry, but always adopting such, services is definitely gonna be, beneficial. So I think, and we've seen adopting, the robo-advisory processes. Our customers are thinking about it to give how we could improve the wealth management areas, how we could increase the customer expectations and data analytics. So this is what we by key touch, that this is the time that people start thinking about it and start, adopting it, as soon as they can. This is only going to help them.
Sure. So what I'm hearing actually collectively from the three of you is there's balance.
Yes.
There is definitely a role for AI and machine learning,
Yes.
but there needs to be balance. And I quite like the statement that was made around, if it's easy, a customer's not going to be fussed about dealing with a human or a machine. If it's complicated, be it human or machine, they're going to have a poor experience anyway. So excellent. So look, there are lots of questions for several panelists around what does the future hold? What does it look like? What are your thoughts and feelings about the next 5 years in terms of the banking system in KSA and globally? So what I'm going to do, I want to bring everyone in here, but we literally have 1 minute to do this. And what I'd like is each of you just say a word, a statement that would summarize your thoughts for the next 5 years in our industry. So I'll go first. So for me, very challenging, but very exciting. Now I'm going to go around in the order that you appear on my screen. So I'm not picking on anyone here. So if you're first or last, it's literally how you appear on my screen here. So Basil, your word or phrase?
Evolution.
Evolution. Eva.
Digital, but humanized and personalized.
Fantastic. Shemek.
I would say as well, very personalized due to machine learning or AI capabilities.
Excellent. Fahad.
I would say it's in your fingertips.
Oh, brilliant. Abdul Machine.
I think it's digitalization, more better customer journey.
Excellent. Paolo.
I would say anticipatory and proactive.
Brilliant. Baha. Oh, you're on mute.
So digital transformation and customer experience, definitely. I agree with Abdul Majid.
Excellent. Andrew?
I think we're going to see much more of a broking role of institutions providing a much wider set of services to meet multiple needs.
Brilliant. And finally, Honey. Honey, do we still have you? We've lost Honey. Everyone, thank you very much. Like I said, there were lots and lots of questions. I don't think we'd need another day to get just through the questions. Thank you for your input. Thank you for your interaction. And on that note, I will now move to close the conference. But thank you very much. Thank you for joining again. For those of you who stayed on, excellent. Thank you.
Thank you.
Thank you, everyone.
Thank you very much.
Thank you, everyone.
Thank you.
Bye. Take care.
So I'm going to move into the closing of the conference. I think just on a personal note, I mentioned yesterday, myself, my wife, we have a very sort of personal interest in Saudi Arabia, the developments that are happening there. We track Vision 2030 very closely. We have family there. My wife's Saudi. My daughter was born there. It's not just another country. from my point of view. And actually what's been really, really fantastic, and thank you to Verve for inviting me to be part of this, is being able to bring my professional interest into the personal domain of my life. And I thoroughly have enjoyed the engagement and having the opportunity to speak to you and to connect with you. It'd be a miss for me to not thank our partners and our sponsors. Again, they've made this possible. So platinum sponsor, Intellect IGTB, titanium sponsor, Comarch, strategic analytics partner, Alteryx, our silver sponsor, AppsFlyer, and financial messaging partner, Swift. Thank you for supporting us on this journey. Thank you for making this possible. As ever, there's still some time left, so please engage, connect, use the portal, make connections, speak to our sponsors, speak to our partners, make friends. A lot of these relationships go on for many years after the conference is completed. But on that note, like I said, a personal thank you from me. I felt like I've been in Saudi. We've not had the chance to visit Saudi as much as we normally do. We normally go 3 times a year. We've only made it once this year, but I feel like I've been able to virtually connect with the Saudi community through this conference. So thank you, Verve. And on that note, I'll hand over to Rohan, who will close the conference. Thank you very much.
Thank you, Amit. Hello again. Well, this brings us to the end of this marvelous 2-day conference. What an exciting 2 days we had, with some fantastic presentations, discussions, and attendance by our lovely audience. I'd like to once again thank all of our speakers who took time off their busy schedule during these 2 days. We all know that how busy we all are in current times. And this conference would not have been possible without the support of our sponsors and partners. IGTB, Platinum sponsor, Comarch, Titanium sponsor, FSS, Payments Technology partner, AppsFlyer, Silver sponsor, Alteryx, Strategic Analytics partner, Swift, Financial Messaging partner, all of our strategic media partners, and of course, our wonderful audience. Thank you all indeed. Our entire Verve management team cannot find words enough to thank Amit, who was absolutely phenomenal during these 2 days. Amit was the chairperson of the conference, the lifeline of the agenda, and a savior on many occasions for us, the organizers. Thank you so much, Amit. Now, before we end this conference, I'd also like our audience to know that the conference platform is still open for networking and scheduled meetings. And as Amit just said, please take this opportunity to network with as many people as possible, make as many friends as you can. Do visit our sponsor booths. They've got some amazing content over there. They've got some really interesting videos and brochures. So please do visit. Please say hello to our sponsors who've taken time out to represent their best technologies at this conference. The top 3 delegates on the leaderboard will be contacted within the next 2 days in order for us to award the prizes. We will also share an email with all the recorded speaking sessions, poll results, and other interesting analytics with the attendees within the next 2 days. So please bear with us while we collate all the data and share with each one of you. On behalf of the entire Verve management team, I thank you all and wish you a healthy future ahead until we meet again for the 2nd edition of the summit. Goodbye.